Robschild. Nothing I say is investment advice. Welcome to the show where we discuss financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do. And so we begin. Today is January 23rd, 2024. The first thing I want to bring up is the Market Watch page. There was nothing scheduled from major U.S. economic reports or speeches, and the markets reacted as such. Generally, the markets didn't really move much at all. We have some interesting patterns developing, and they are worth taking note of. And then there's some interesting things going on with China today. So let's begin with the 30-year Treasury yield. I noticed that over the past 3 days we've actually developed what looks to be a right shoulder on a potential little head and shoulders here. These kinds of patterns typically play out like clockwork. You can take the head to the neckline, put the neckline there, and what do we have? We have a target of 4.78, essentially 4.8. Funny enough, I had done a video a while back when it got to about 4.7 and talking about how attractive I thought it was at that point. It's funny how the stars align, and it looks like we may be headed back to that point. This is a chart very much worth keeping an eye on. I will be participating if we get to that yield of 4.7% again. My longer term views have a lot to do with demographics in the United States, mostly being that we're seeing potential population declines. We have already low enough birth rates for that to start happening. It's already started in China. This segues exactly to what's going on in China, but we'll talk about China in a little bit. Getting back to this yield, a yield of 4.7% on a guaranteed treasury for 30 years in my book is still a darn good deal, especially when you're taking a look at stock valuations, you're taking a look at PE ratios and these kinds of things of companies that are priced very obviously with a lot of speculation. Benjamin Graham talks about in his book Security Analysis that every stock sort of has its investment portion and its speculative portion. And so a big part of what drives stocks to be so overvalued is that they have a very large amount of speculative value, even though they haven't proven to be able to earn that much money in the future. I believe smart investing involves not trying to predict the future. Yeah, I know, I got the crystal ball, okay? But when it comes to individual company success, as in like their earnings are just going to double every year for the next 10 years, that's very speculative. Benjamin Graham would not approve of that kind of investment style. He would say, no, don't do that. You can assume that you can take the average amount of earnings that they've had over the past 10 years to project a growth of earnings from now into the future. You need to be very careful with that, especially when if the rate is above inflation rate, right? So if inflation is at 3%, and your earnings growth is somewhere between 3 and 10% a year, that's a more reasonable kind of expectation. To have the kind of valuations a lot of companies have today, it's astronomical how much more money these companies need to make in order for their valuations to make any kind of sense. So again, I'm looking for, this chart shows it going up to 4.8. I'm happy to get in at 4.7 if we get there again. We have a similar setup in the TNX with a little pattern there. This is the head and shoulders. If we don't break this neckline, and we ignore all of these lines here, at the very least, if this gets rejected, we don't go through it. A shoulder can continue to develop, but overall, this pattern going straight up looks like it kind of wants to start at least going sideways. So that's another little way to look at it. Next topic to bring up is the March Fed meeting, the Fed funds futures. Today we have strengthening belief in a cut to a 25 basis cut in that month. I found that to be a little interesting, not super interesting. We're either starting the cuts in March or we're starting the cuts in May. That's what the market is saying, and they're pretty much predicting once we start it, it just doesn't stop. Well, really, if we cut in March, then it'll stay that way in May and then do the next cut in June. Another chart I wanted to bring up, this is 3 times leverage on bear fund for semiconductors. I've been talking about in all of my shows so far how I think that semiconductors are overdone, and Michael Burry actually took a short position, it sounds like, on semiconductors as well. Overall, semiconductors, once we have enough supply, everybody has all the supply they need to do whatever they think they have to do with AI, and well, it's mostly just AI, right? It's a good question though. Are we headed into a real big expansion of artificial intelligence, or are we in one of these peaks? I'm guessing it's more likely we're in one of these peaks that might settle. They take a little while to settle. Some people talk about how the dot-com bubble wasn't really a bubble in retrospect. Compared to today, for how big the internet is, it just kind of got ahead of itself in its price. And I think maybe we might be seeing a similar thing going on with people speculating about how much value artificial intelligence can bring to the markets. So the bear chart here, we had this falling motion here. It looks tasty here. It looks tasty. I'm thinking about taking a bite. It's hard to short. Shorting, whenever you take the bear side of a trade, it's harder because most markets go up most of the time. And so anytime that you're doing any kind of shorting or betting on a bear market, you have to be very careful with those kinds of positions. So we definitely need caution on that. Chart I've been bringing up lately in a few videos, the EWZ. If you check out yesterday's video, I went into a little more detail on Brazil. This market, here's the line. If we count that as a close and count that as a retest, when we zoom out far on this chart, we can see that this really might be the place to go long in this market. It's potentially very dry gunpowder here. The last chart I wanted to bring up is the KWEB chart. This is the most exciting chart in China because it holds the Amazon and Netflix, all of these all the equivalents of our big internet companies. That's what this fund holds. Now China have been reporting a decline in population, which was really bad news they came out with recently. It kind of, I believe that actually caused this break in market. See, we had support in this area and we kind of broke it. This market started to get, people are fleeing from investing in China, or had been, off of that news, along with not great other economic data. I've said this before, the United States economy often tends to follow what goes on in China, and China has the money printer on big time. Today there was an article that came out. It's all over the news really, that the Chinese government is looking to stimulate the economy by, guess what? Well, if you haven't seen it, buying stocks. The actual government is going to be injecting liquidity into their stock market to help with their economy, help people feel wealthier, to get things going. You know, it's been discussed whether or not that would ever happen in the United States. It may happen. It may happen soon. If we have, especially if we have some like super crazy um, run for the hills from the stock market scenario, Black Tuesday or something like this, um, we could even see that coming in the US. And so for me, when I look in my crystal ball, this Chinese market is a little foretelling as to what I think may be happening in our future here in the United States. So when that news broke that China is going to be buying all their own stocks, you can see we were falling off a cliff with no support. We were headed into seemingly like we might get all the way to zero or something. But today there was a huge pop in markets, and so I'm expecting I'm expecting actually the Chinese stocks to recover marvelously from here. I think that once that news gets around to the regular people, we might. I think that this is going to be a very bullish market tomorrow, specifically when I look really deep into my crystal ball. And that's how it is. So, again, overall in markets today, there was no news that came out as far as U.S. economic data. And so I describe it in my head as akin to Groundhog Day, which is coming up in 2 weeks on Friday. You know, trying to poke our head out of the ground and see if we can see a shadow. We're looking for a shadow. We don't see one yet. Everything, all the charts look like, you know, nothing's really happening besides that news coming out of China. One last note, I may not be able to make any videos for the rest of this week, Wednesday, Thursday, Friday. I have things that I need to do that may prevent me from being able to continue these videos for the rest of the week, but rest assured I will definitely be back on Monday to continue our crystal ball gazing of financial markets. And with that, I leave you. Thank you for watching, and see you next time. Robschild.